Philip, thanks again for joining us today. Portfolios have had a lot of challenges this year, and we just want to give our clients a little bit of an idea. Where do you think we are in this market cycle? Are we closer to a bottom? Is there more potential for downturn? What are your thoughts right now?
Well, certainly, and thanks for having me on. I would say, look, I think the first thing we need to do is identify the center of all the stress in the market, like what triggered the volatility that we saw at the beginning of the year with the equity markets and with the fixed income markets. And it's very simple. It all came from inflation, much higher inflation than what the market had anticipated a year ago. And I would argue much higher inflation than what we were told by the central banks. Remember, transitory was the word. Everyone was using transitory, even though we knew inflation wasn't going to be quite as transitory as what the Federal Reserve or the Bank of Canada thought. And the realization of that, when the market started to realize that no, inflation was going to be a little bit stickier, go further than what we thought, as we've seen in Canada, peaked out just over 8%, in the United States around the same. That meant that we were going to see much stronger response out of the central banks than what was thought at the beginning of the year. So what was 2 interest rate increases has become potentially 6. We were going to see the Bank of Canada raise to 1%, now is potentially 4. So once that realization set in, then you had the equity markets repricing risk, changing the discount rates that we use to identify what is fair value, and you get the bear market. We saw it worse in the United States because it was more expensive than other areas of the world. Canada was one of the cheaper areas of the world, and so we haven't seen as much of a decline in Canada. But at the same time, with that realization of interest rates are going up, that's where we got the double whammy, or in fact, I would argue interest rates led to a fall in the value of bonds, which led to a fall in the value of equities. This doesn't happen very often when you see bonds and equities down at the same time, and to the degree that we've seen this year. So it's an unfortunate confluence of events or perfect storm that kind of worked its way through the market. Okay, now getting to the question of where are we? Well, the good news is that from our perspective, we believe that inflation has peaked. We've seen that in Canada. It looks like inflation is on its way down from its peak earlier in the summertime. In the United States, it looks like it's peaking or close to it, which means we're near the end of the interest rate increases. And at the same time, we've seen a bear market in the US and many markets, equity markets around the world. So I would argue, even though we're probably facing economic headwinds into 2023, I think a lot of that has already been priced in. So are we at the bottom? We never know until well after the fact. But I would say that we are 2/3, if not 90% of the way through this downside.